Hey everyone, Larry Bailey here, bringing you another weekly newsletter. We're going to go through the events of last week in review. This one happens to be for the week of June 3rd, 2024. As always, this information is brought to you from MBS Highway, your trusted source for mortgage market intelligence. If you want to get it firsthand and get in there directly, go to mbshighway.com. It's also brought to you from ATI. You can find out more information about everything you need, automated workflow enhancements, plugins, custom development, system administrative services, etc. You can find all about that at awesometechinc.com. And if you truly want to master your Encompass platform for either administrators or for users, head over to masteringencompass.com. So let's get into the review. This is for the week of June 3rd, 2024, as talked about. So despite stronger than expected job growth in May, there are some signs that the labor market is softening. Plus, appreciating home values show the opportunity that remains in homeownership. Here are last week's highlights. First story is big discrepancy in jobs data. The next story is private payrolls shows signs of weakness. The next story is job openings continue to contract. The next story is initial jobless claims hit 4-week high. And the last story is opportunity in housing remains strong. So before I get into the stories, if you're listening to this on a replay on the podcast, that's great. If you want to see what's going on screen, as well as check out the family hack of the week, head over to mortgage.community, head over to the market updates. If you're not a member, it's okay. It's free. Join. It's no problem. So here's the first story, big discrepancy in jobs data. So the Bureau of Labor Statistics, that's the BLS, that reported that there were 272,000 jobs created in May, which was much stronger than the 185,000 new jobs that had been forecasted. However, negative revisions to March and April cut 15,000 jobs in those months combined, while the unemployment rate rose from 3.9% to 4%, which was the highest since January of 2022. So the bottom line here is it is important to look at both surveys. Remember, this BLS report has two. And so here's the first one, the headline jobs number. That comes from the Bureau, the report's business survey. And so that predominantly bases its numbers on modeling and estimations. In fact, one of the biggest reasons we saw a large job gains last month was the birth-death model. And we've talked about this before, by the way. This was mentioned, we're in June now, maybe back in February, earlier this year. So this is where the BLS estimates new business creation relative to closed businesses and how many jobs it created. It's a total estimate. So in May, this model added 231,000 jobs to the headline figure, which would have shown a gain of just 41,000 jobs otherwise. Meanwhile, the household surveys job creation component, which is considered the more real-time, because it's basically derived by literally calling people, it showed 408,000 job losses, which is a huge divergence from the headline figure, of course. Looking more closely at this data, the part-time workers increased by 286,000, while full-time workers fell by 625,000, suggesting some softening in the job market despite the strong headline number. Private payrolls show signs of weakness. So this is continuing along the employment, like we talked about last week, or the previous week's review. We were saying all next week, which was last week, which is what we're talking about, was all about employment. So we are delivering the beef. So here it is, private payroll shows signs of weakness. Now this one comes from ADP. So ADP's employment report showed that private payrolls rose less than expected in May as employers added 152,000 new jobs versus the 175,000 that had been forecasted. Job growth in April was also revised lower by 4,000 jobs. Nearly all the gains came from service providing sectors, which is 149,000 people to the positive, with goods producers only adding 3,000 jobs due to a slowdown in manufacturing and mining. Small businesses, they also continue to feel a pinch as those with fewer employees, like my companies, reported 10,000 job losses. Fortunately, we didn't have to lay anybody off. We're still growing, so good for us. So this is compared to the 177,000 new jobs added among medium and large companies combined. Annual pay gains decelerated for job changers, with ADP reporting an average increase of just 7.8% in May versus 9.3% in April. Job stayers saw an average of increase of 5% for the third month in a row. Bottom line here, gang, is job gains and pay growth are slowing going into the second half of the year. This is spoken to by Neela Richardson, who's the chief economist for ADP. Neela went on to say the labor market is solid, but we are monitoring notable pockets of weakness tied to both producers and consumers. Okay. Next story is job openings continue to contract. So the latest job openings and labor turnover survey, aka JOLTS report, showed that job openings contracted to 8.059 million in April, coming in well below estimates, while March's openings also saw a significant revision lower from 8.488 million to 8.355 million. The hiring rate and quit rate both held steady at 3.6% and 2.2% respectively. So bottom line with this story is that job openings have reached their lowest level since February 2021 and are now well below the high of 12 million hit in 2022. Plus the quit rate has also fallen over the last year, suggesting there's less poaching from other companies and fewer people feel confident about finding new employment. Overall, this data has another sign that weakness is building in the labor sector. Again, more employment here. So this story is all about initial jobless claims hitting 4-week high. The initial jobless claims rose by 8,000 in the latest week, with 229,000 people filing for new unemployment claims. There were also 1.792 million people still receiving benefits after filing their initial claim, as continuing claims increased by 2,000 people. Bottom line with initial jobless claims is that while they remain low on a historical basis, continuing claims are still trending near some of the hottest levels we've seen in recent years, suggesting that layoffs remain low, but the pace of hiring has slowed. This correlates with the slowdown in hiring seen in the JOLTS report, as well as a job cuts report from Challenger Gray and Christmas, which showed that hiring announcements fell to the lowest year-to-date level in a decade. And by the way, side note, personal note, remember, this is all being watched by the Fed. We're going to get into what we expect to look for this week, but listen, I don't want anybody out of work, but the Fed's policies are doing two mandates. Remember, this is what we talked about before, two mandates. First mandate is employment. The second mandate is price stability. So in order to get price stability, monetary policy at a point where it's less expensive, we need to see softening. And so good news is hopefully it's not falling off a cliff. This is the soft landing we've been talking about now for, it feels like 3 years. Maybe we're starting to see it finally. We'll see. Next story is opportunity in housing remains strong. So this is all about appreciation. You know it's going to come. CoreLogic's home price index showed that the home price nationwide rose 1.1% in April after rising 1.2% in March, showing that home price appreciation remains strong this spring. Prices also rose 5.3% higher when compared to April of last year. CoreLogic forecasts that home prices will rise 0.8% in May and 3.4% in the full year going forward. Though remember, their forecasts are typically on the conservative side, so it is possible the appreciation may even be higher. ICE, which stands for Intercontinental Exchange, formerly known as Black Knight, they have a data center thing. That Black Knight was purchased by Intercontinental Exchange for the data. Anyway, ICE also reported that national home values rose 0.3% in April after a seasonal adjustment, with their index showing that prices were 5.1% higher than a year ago. Bottom line, gang, the latest rise in home prices reported by CoreLogic and ICE echoes the strong growth seen by other major indices like Case-Shiller and the Federal Housing Finance Agency, also known as FHFA. These reports continue to demonstrate why homeownership remains a good opportunity for building wealth through real estate. Okay, let's celebrate National Cupcake Lovers Day on June 13th this week. There's a recipe here from the Food Network, and it's all about chocolate nosh cupcakes. I know some people see ganache and they go ganache, but it's really nosh, I think. Anyway, if you want to see this full recipe, head over to mortgage.community. It's right around the 9-minute, 15-second mark of the recording. Get in there and check out the Family Hack of the Week for National Cupcake Lovers Day. Here's what we're going to look for this week. The Fed's two-day meeting begins Tuesday with a monetary policy statement and press conference coming Wednesday afternoon. Members will most certainly dissect the inflation data that will be reported on Wednesday morning when May's Consumer Price Index is released. An update on wholesale inflation via the Producer Price Index follows on Thursday. Also of note, look for the news on small business optimism from the NFIB on Tuesday and the latest jobless claims on Thursday. Investors will be closely watching the Tuesday Treasury, Tuesday's 10-year note and Thursday's 30-year bond auctions, if I could spit it out, for the level of demand. If you see up here on the right, the Treasury cost is dropping, which is good. And we see the mortgage-backed security price is increasing. It's good. We'll see where this leads. My name's Larry Bailey. Thanks for always listening in. And we'll catch you next week. See you now. Bye-bye.